Now, 2017 was a very challenging year for not just the banking sector, but for the entire economy. Could you tell me, how was 2017 for Sidian Bank?
2017, at the time I joined, the bank was not performing well. There were challenges. One is partly because of the interest caps in 2016, and also there had been many changes in the bank as well. Rebranding has just been finished. There had been a VER for some of the staff. So I joined the bank at a time when it was very challenging and very difficult. At the beginning of August. And the first thing whenever I join organizations, first of all, to try and see whether we can turn around the tide and make sure that the bank is then on upward trend and growth. So as I joined the bank, I was very clear that I'm not joining an organization that is performing well at that point in time, and therefore I had to roll out my sleeves together with the team and tell them we need to get everyone together as a team to focus on turning around the bank. The transformation journey that had been started by previous CEO, we had to continue or we had to make some changes. So when I joined the bank, we had the bank, as you may have seen, half year, the performance was not good, so it reported losses, and the situation was not getting better. But the good thing is, when I look at the bank, I saw potential in it. The bank has huge customer base. The bank has a big branch network. The bank has strong shareholders. The Centum Group is a fairly strong group. And therefore, my view was that to try and leverage on the strengths the bank has in terms of strong shareholders behind the bank, has rich history in terms of supporting the microfinance sector, growing SMEs, and the bank that has dealt with donors in the past in ensuring that whatever project they're implementing have a high or a huge social impact in society. And with close to slightly more than 500,000 customers, I thought there's something that we can do. So we just need to understand what is not working. And primarily what I realized is about people. So when I realized that this bank has huge potential, we can grow together, and you just need to pull the troops together, you need to get the team together. And we had initial discussions with the team, and I just agreed, let's focus on the next 90 days. And that is what then helped us to start turning around the bank. In August, September, October, by the end of the year, even in terms of liquidity, had improved to about 25%. In terms of trade finance, we had done, when I joined the bank, was about $1 billion, and by the time we closed the year last year, it was over $6 billion. So again, taking different initiatives to make sure that we pull together, we grow together, we meet the needs of our customers, we provide solutions that are practical, and we do things in a different way.
Now, Sidian Bank was formerly known as Kere Bank, and you are actually the very first microfinance bank in this country. And you are well known for lending, especially through the group network, where group members would co-guarantee each other. That model seems to have changed across the entire banking sector. I'd like to just find out from you now as Sidian Bank, what has really changed in terms of how you interact with your customers and how you lend to your customers?
The transformation was headed in the right direction. I think what happened is the many things that happened during the middle of this transformation. And if we go back, the transformation started well around 2015, but then 2015 is also when we had the shocks allowed Imperial Bank, and 2016 Chase Bank, and thereafter the interest caps. So in the middle of all this transformation, then you have some shocks. So the bank faced some of those challenges. But the transformation also did not mean that the bank forgot where it came from. So we still have a significant group of customers, or even lending to these groups, or even to the small entities or individuals and such. So the core business that the bank used to do has not been forgotten or left behind. What has happened is a realization that over the years, those groups, many of them have grown from simple groups to where individuals of those groups are now, some of them are small corporates or large SMEs, and others have moved on to doing business on their own. So that is one of the areas that the bank, I think in some early years, was not able to move very well, where you move from group-based lending or individual microfinance lending and you don't grow with the customer. And that is what we are seeing now, that the people who started with this bank now, some of them are very large SMEs. And therefore, it's to go back and say, yes, we never worked with you when you grew, but we can still grow with you. The group lending is still there, and it's still not small in our branches, whether you look at Kengereni, Kangemi, or you look at Kenyatta Market. There's still Busia, Bugoma, and such. We still do a lot of group lending. However, because of the growth of the bank, the SMEs that were there with the bank and others that have come to the bank have continued to grow. Now, in the middle of all this transformation, of course, things may work, others may not work. And my view is that the short times that have been there, I think the shocks around the failure of some of the banks and also interest caps are the ones that cause the bank not to perform well. If you look at now, there are different strategies that we have taken, dealing with the same customers, but providing probably 3 different solutions. We expect 2018 to be a very different year. And we saw that in the last quarter of 2017, the short time I've been here, the bank has changed. If you look at our liquidity, it's reasonably high, looking at where we came from. And therefore, the model is working. So you get the people, you focus on what the customers are looking for. I think the model is not wrong. I believe it can work, and it will work. We just need to keep on thinking to meet the customer needs and requirements.
The new law regulating the charging of interest rate came into effect in 2016, actually the 3rd quarter of 2016. I'm just curious to find out what the impact of this has been on Sidian Bank, given that now we have actually had a full financial year with the law in place.
I think it's a huge impact. At a high-level figure, is probably 30% of interest income came down by 30%, and which is a big impact. And that continues to hurt the business. I think the only thing that we have done for us as a bank is then to change our model, not focus a lot on...
That is net interest income?
Yes. Net interest income has come down by as high as 30%, which is significant. And it's a factor of 2, because interest income has come down, but interest expense has not come down at the same rate because of the floor on the deposits. Because I think one of the areas that the market has not talked about is the floor on deposits. So we always talk about caps, which is the upper cap on lending, but also in the law also put a restriction on the minimum interest that you can pay. So it's a double-edged sword. And when you put a minimum, it's not that customers will accept just that bare minimum. They also ask for slightly higher than the bare minimum, especially when they are competing with treasury bills and bonds. So that's a challenge that the banks have. That the upper cap is 14, the lower limit is 7, but the lower limit can go as high as 10. And therefore, the margin that you're talking about is probably sometimes as low as 4%.
2017 was a political year, in the sense that we did have our general election towards the end of the year. But the political activity started quite early.
Yes.
Now, a lot of people have said that this did have an impact in their businesses. How did this affect Sidian Bank?
Economically, the bank, yes, 2017 was difficult. Politically, economically, yes, it was impacted. The country was impacted. As a bank, we can't say that because of political, where we are present in many parts of the country, but we did not see any impact in terms of the politics that were going on in the country. So we did not see, for example, any difference in Nyeri or Mburanga or Kisumu or Mombasa or Kakamega. We did not see much of an impact by the politics. I think where we saw an impact on the performance of the business is areas around the SMEs. And those SMEs could be anywhere in the country, especially the SMEs that are dealing with county government, with national governments. What we saw is a delay in payments. So you find some of their loans were in arrears for some time. Of course, as towards the end of the year, we saw an improvement when the government and county governments resumed payments. So the impact we saw was delayed payments and slowdown in business by some of these SMEs, especially those who do a lot of business with the government and county governments. But politically, as a large network, we do not see any impact in any part of the country, no. And we continue serving our customers as usual, giving them the best service that we could offer. And our staff were able to continue delivering the bank the services that they are accustomed to delivering to the customers throughout the year.
Do you do mobile credit at the moment?
We are in pilot phase. We're just waiting for central bank approval. So we've been doing some piloting, and we are now in discussion with central bank for the approval. Again, we want to approach it in a different way from probably some of the other market players have done. Our approach is to say the small tickets of 10,000, 20,000 sometimes do not help in terms of growing the economy. What we want to do is to be able to automate that process even for higher tickets and be able to attach that or link that with what the customer is doing. And also be able to restrict on what the customer can do with the funds as once they get the loan approved through mobile loan application, and then we're able to ask them to choose what they want to do with that money, but restrict on what they can do, so that then we're not lending out purely for consumption.
In 5 years' time, where do you see Sidian Bank with you at the helm?
I think in 5 years' time, I'm very confident this will be a Tier 2 bank, and a very strong Tier 2, in excess of a balance sheet of over 60 billion. That I'm very, very confident that the bank is headed there. The shareholders have already committed to put more capital. This year they have already approved the rights issue where they'll put in an additional 1.5 billion to help us continue growing with the rapid growth that we started last year. And we believe that momentum will be maintained because, again, as a country, our middle class, if you look around what is happening in this town or in the country all over, there's a lot of economic activities that are going on, constructions everywhere, infrastructure projects, and therefore the potential for growth in the banking sector is huge. With the county governments settling down and be key drivers of the economic growth in the country, we are determined to grow this bank, and our strategy is focused around ensuring this bank stands to Tier 2 by 2022. Yes.
You are an engineer by training. A lot of people actually leading the banking sector in Kenya at the moment have a background in banking. So you stand out in many ways because your focus and your background is in a very different field. But this, I would imagine, gives you an advantage over probably other people within the banking sector. Do you see a niche for yourself as somebody who has a different background from what one would expect of a bank CEO?
I think one of the things that I've learned in life as engineers is we focus more on looking for solutions. And that's the difference between probably engineers and some of the other professions where numbers sometimes become the key driver. So for me, whenever I interact with my colleague or with a customer or potential customer, one is to listen to what the challenge is, to understand what the requirements are, and look at what kind of solutions that might be there. I may structure a solution with my engineering, operations, or technology background, but primarily I provide a solution. And that is what is important for the customers. When they come to my office, they come with a problem. For me, is to provide a solution. It may not be the solution that they expected, but at least I have provided a viable solution. And that's the difference between probably those of us who are with engineering background with others who are not engineering background. So we don't focus a lot with numbers, but we provide practical solutions. And even here in the bank, that's one of the things that I've seen since I started heading business, this being my 3rd year, that providing solutions to most of the customers is what is more crucial than just giving out money.
If I were to ask you to give me just three three things that you think are the biggest threat to the growth of the banking sector in Kenya, what would they be?
I think the biggest is the regulation. I think if you come with the regulatory environment that is not conducive to doing business in this sector, then you slow down. For example, the capping, as an example, it reduces the access to credit to the majority of Kenyans. That is a big threat to many of us and to the many in the banking sector. The second thing is, of course, there is competition that may not necessarily be healthy competition, because banks are regulated while others are not regulated. If you look at the microfinance, some of them who are just doing credit only, they're not regulated. If you look at the mobile operators and some of the things they do, they're not regulated. And therefore, when you have an environment where some players in the sector, especially banks, are working in a very restricted regulatory environment and others are not working, then that can create other challenges for the economy and also create instability in the banking sector. And it doesn't matter which size of bank you are, you can be affected when there is no level playing field. And especially when everybody who is involved in financial services, there needs to be some form of regulation in one way or another, so that then you don't have some of the things that we saw in the past, including pyramid schemes and all others. Or Kenyans are exploited by some unregulated lenders at extremely high rates, and yet they can access credit at much lower rates if the environment is a level playing field or the regulation is impacting everyone. The third one, which I think is also what is happening around the world, the financial sector is so integrated in a way that you cannot ignore what happens in the US, Europe, and the rest. And when the world economy sometimes is not performing well, the local financial sector is also affected in one way or another. And especially also some of these countries who are putting strict governance allowed compliance. That will still continue to be a threat to the local banking sector, because whatever is done in the US, Europe could also affect banks locally here, especially when it comes to international business.